In recent years, the automotive industry has witnessed a momentous shift with the rise of electric vehicles as a disruptive force. Tesla, the pioneer in this electric revolution, has unapologetically directed its efforts towards traditional automakers globally, challenging the status quo and compelling them to adapt to the changing landscape. However, Tesla's reach doesn't stop there. It appears that the next target in Tesla's crosshairs might be the formidable giants of the fossil fuel industry, big oil companies. Tesla's incursion into the realm of electric vehicles is not only reshaping the automotive landscape, but also sending tremors through the very foundations of the oil industry. Faced with a mounting sense of trepidation and a realization that their core business model is at dire risk, these oil behemoths are reluctantly beginning to undertake profound changes to stave off the impending disruption. And before we continue, stop using Yahoo Finance, stop using Google Finance, and have a look at our website, themarketisopen.com, where we have instant stock quotes and a brand new set of quarterly financial data going back up to 15 years on over 9,000 stocks, and it's all freely available. Oil will certainly be around for a long time. As Elon Musk says, even if 100% of the transportation vehicles being produced today were electric, it would still take roughly 20 years to transition the entire fleet. Not to mention that oil is used for much more than just transportation alone. However, Tesla's mission has evolved over time, originally being focused on the advent of sustainable transport with their mass-market electric vehicles. But now the company has expanded its focus to accelerating the world's transition to sustainable energy, which has been made very evident with products like the Powerwall and Megapack and Elon Musk's plans for Master Plan Part 3. Furthermore, Elon Musk has repeated on multiple occasions that his motive for starting Tesla had little to do with climate and was more about how fossil fuels are a finite resource and the world will eventually run out of them. This means that even if you focus on just switching vehicles to electric, there are still other industries that rely on oil, and so it just delays the inevitable. Now, 10 years ago, oil giant ExxonMobil was the largest company in the world. However, while it remains the largest non-government-owned oil company today, it has dropped in rank to the 16th largest company. That's not to say that Exxon isn't doing well. Their profits continue to soar, and their stock is near all-time highs. However, the company is relying on the volatile price of oil for growth opportunities, which may fall short in the coming years. Technology companies have moved to surpass Exxon, namely Tesla, which is in a sense the antithesis of this major oil company, and is now worth twice the value of Exxon. Even though Exxon makes more money than Tesla, it suggests where investors believe the future is headed. ExxonMobil's operations span the entire spectrum of the oil and gas industry. In their upstream activities, they explore, develop, and produce oil and gas from reserves worldwide, using cutting-edge technology to maximize extraction efficiency. Downstream, they refine crude oil into an array of petroleum products like gasoline, diesel, and petrochemicals, which are distributed globally through their network of service stations and retail outlets. They also purchase tens of billions of dollars of crude oil and oil products from various countries around the world in order to generate revenue. Additionally, the company is a significant player in the petrochemical industry, marketing chemical products derived from oil and natural gas. And furthermore, ExxonMobil ventures into the realm of natural gas exploration, production, and marketing, including participation in liquefied natural gas projects. While they also delve into other businesses, such as alternative fuels research and renewable energy projects, their main focus remains on their core oil and gas operations. Exxon is within the top 5 most profitable companies in the world, earning over $55 billion in net profits last year in 2022. However, they only invest a small fraction into what they say are low-carbon projects, even though the company does have an ambitious goal to reach net zero greenhouse gas emissions just for its own operated assets in 27 years from now, by 2050. This long time horizon is actually fairly expected from Exxon. It is an oil company after all, making it difficult to achieve net zero emissions. That said, the company has been trying to transform itself into a more broader energy company, even if its investments have been but a small drop in the bucket. A significant part of Exxon's new renewable initiatives are focused on renewable biofuels, sourced from plants or other sources, which are still burnt and released into the atmosphere. For instance, the company grows algae for biofuels and invests in renewable diesel. It also has projects where it can combine renewable hydrogen with carbon dioxide captured from the atmosphere to produce methanol and subsequently gasoline. This is a little bit reminiscent of the Henry Ford quote, where he says that if he had asked people what they'd wanted, they would have said faster horses. Exxon is still entrenched with the combustion engine, designing or coming up with ways to try and make better fuel, but for the same type of engine. Their 2050 targets for shifting to fewer emissions opens the door for their businesses to be disrupted, specifically by the decline of the combustion engine. It also doesn't take much to influence the price of oil in terms of supply and demand imbalances. While shortages can make prices skyrocket, we also saw the price of oil go negative in 2020 due to the rapid decline in demand. Exxon is highly reliant on oil prices and especially volume for continued profits from fossil fuels. Now, the number of electric vehicles being produced each year continues to grow quickly, although it will take millions, roughly 36 million passenger EV cars or 1.5 million semi-trucks to displace 1 million barrels of oil per day. But that's about 2 years of EV production at the current rate, with the IEA estimating that by 2030, about 5 million barrels of oil per day will be replaced. However, it also estimates that oil usage is expected to grow around the world, and so this trend to electric vehicles could only help stunt the growth in oil for the time being. It's also worth noting something interesting, that the forecast for oil demand in 2020 during the pandemic had analysts expecting a dramatic rebound followed by continued growth into 2021. However, this took much longer to happen, delaying the rise of oil demand by about 3 years. Notably, electric vehicles have garnered a larger share of the automotive market since then, and coupled with remote work trends and other factors, might be contributing to the constraints on oil demand expansion. And this may be causing Exxon to look elsewhere for profits. According to Reuters, Exxon is in talks with Tesla and Ford to supply lithium for electric vehicle batteries. Exxon has also made land purchases earlier this year, potentially to develop areas containing lithium-rich brine. Now, while these talks are in their preliminary form, it's great to have such a large company further pouring resources into the EV sector. And this seems like it may be more impactful than Exxon's other initiatives, since lithium backs more efficient vehicles using electric motors, while other ways to create diesel or gasoline still back the combustion engine. However, for Exxon itself, the lithium industry doesn't seem like it will be enough to move the needle. We mentioned this in our lithium video, where there are many projects around the world being started for mining and refining lithium. And while currently the industry is constrained and expects to see a lot of lucrative growth, ultimately the world doesn't need that much lithium to make the transition to electric. Tesla says there are just 5 kilograms of lithium in an electric vehicle, which at a generous 100 million EVs per year, assuming 100% market share, is only 500,000 tons of lithium. Some of these small startups appear to be bringing on tens of thousands of tons each. Even Tesla's building their own lithium refinery. And so it would only take a handful of companies to achieve this. Even if you doubled the number for, say, stationary batteries, this doesn't appear to be the multi-$100 billion industry that Exxon is looking for. Not to mention that ultimately, the lithium inside EVs will be recycled when the vehicles are retired, meaning that mining activity will drop and prices will likely plummet given that lithium is still a commodity. So short and long term, this doesn't seem like the best business case for Exxon. And so how do the large oil companies like Exxon sustain profitability? And rather than resisting the shift to EVs, how can they align themselves with Tesla? Elon Musk outlined during Investor Day his Master Plan Part 3, a massive undertaking to completely rip out fossil fuels from the global economy. Vehicles only make up about 21% of this story, according to Tesla, meaning that there are massive multi-hundred-billion-dollar opportunities elsewhere, and there's no way that Tesla can do this alone. Elon Musk emphasized during Investor Day that one of the lowest hanging fruits was developing heat pumps for homes, businesses, and industry. Tesla estimated a grand total of $300 billion in investments in order to replace 22% of the fossil fuel usage in this area. And the investment was for setting up manufacturing facilities which would deliver multi-year returns. If Exxon is going to get disrupted anyways, they might as well be the ones to do it to themselves. Another industry, perhaps even more up Exxon's alley, is electrifying high-temperature industrial and chemical processes. Exxon already has multiple chemicals businesses, and they're also already looking at using renewable hydrogen for biofuel applications. According to Tesla's presentation, over 50% of industrial heat is greater than 400 degrees Celsius and is used for making cement, steel, fertilizer, plastics, metals refining, and other things. The industry needs purpose-built equipment that enables electrification. This would encompass 17% of global fossil fuel usage and requires an estimated $800 billion investment. Again, Exxon has a major advantage here in that they generate a ton of cash and could quickly invest and become leaders in this space, very much adjacent to their other hydrogen, chemical, and energy-based operations. The combined potential of these opportunities is nearly double the scale of the electric vehicle prospect in terms of the amount of fossil fuels they could displace. This presents an immense opportunity for Exxon to reconsider their stance, as these avenues align with their quest for long-term profitability and the possibility of transitioning away from fossil fuels. As the era of electric dreams becomes an inevitable reality, the looming existential crisis for major oil companies is unavoidable. The conflict between sustainable innovation and deeply entrenched interests persists, albeit only postponing what will eventually occur. Nevertheless, this could signify the end of Exxon as we know it, but by taking proactive measures today to reinvent themselves and align with Elon Musk's and Tesla's strategic vision, they could ensure that they're not left in the dust when the winds of change fully sweep in. So do you think Exxon should consider entering the lithium business to meet evolving needs? Or would it be wiser for the company to closely examine Tesla's Master Plan Part 3 and undertake significant transformative action in adjacent businesses, disrupting themselves to secure potentially a more favorable future? Don't forget to watch my last video on Tesla's new Cybertruck architecture. Please hit the like button and subscribe, we would really appreciate that. And a huge shout out to all of our patrons that help to support our channel. Your support helps us to continue to make great content. Thank you guys so much for watching.